Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. We news the virus spread may be easing off, but the economic fallout is deepening. Firstly, in China, new loans extended to Chinese banks surged in March. Their aggregate financing hit a new record high, and their money supply grew at its fastest pace in 3 years after a big pump of liquidity to support their economy. New bank lending climbed to $670 billion in March, surging from $215 billion in February. Going the other way in the US, new jobless claims exploded again, adding 6.6 million people last week to the prior week's 6.9 million. And don't forget the 3.3 million the week earlier than that. In the 3 weeks, that's almost 17 million people suddenly out of work, on top of those that have had their hours cut or their pay cut, but still retaining their jobs. The US Fed vastly expanded its backstop lending to companies that are now in dire straits, chiming with a new $2.3 trillion program on top of the trillions previously announced. And South Korea is getting a wave of severe cutbacks, not because their virus situation is out of control, it isn't, but because demand has plummeted in its key export markets, especially in the US and Europe. And although their virus situation seems under control, they're still going to the polls tomorrow in nationwide elections. And Japan is ramping up its social distancing efforts again as signs grow of renewed spread there. Back in China, their commercial property sector is under increasing stress. The vacancy rate for Grade A office buildings in Beijing, Shanghai and Shenzhen rose to 14%, 21% and 25% respectively at the end of March, and that involves sharp rises everywhere. In Australia, the RBA also pointed out commercial property as an ugly risk for banks. They say it's not a killer risk for banks, but that as they pull back, that sector is facing a very tough future as valuations dive and vacancies surge. The New York equity markets are open today and lower. The S&P 500 is down 1.5% and falling. Yesterday, only Asian markets are open, and Shanghai was 0.5% lower. Tokyo was 2.3% lower. Hong Kong was closed. The US Treasury 10-year yield is holding at just on 0.75%, and gold is up strongly today, up $32 to $1,718 an ounce. US oil prices are a little softer at just under $23 a barrel. The Brent benchmark has stayed low at just under $32 a barrel. The expected rise after the OPEC Russia output cut deal hasn't happened. There's just no demand. And the Kiwi dollar will open the week high at 61 US cents. On the cross rates, we're lower at 95.4 Aussie cents, and against the euro, we're at 55.9 euro cents. That means our trade-weighted index will start at 67.1 and its highest in a month. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.